Good evening. Hi. It's a quick weekend or midweek, not weekend, midweek roundup of the U.S. markets and where we're headed. Okay, today we had the FOMC. I've given a fundamental insight and do a quick one for the U.S. Asian markets higher overnight. Basically, a Greek deal, more or less a done deal. Basically on the verge of being completed. The extension has already been requested, and that should be resolved. Russia Ukraine seems to be in the background now, especially after the Minsk agreement and the Russians and the Germans agreed to monitoring. And then we had the situation today with regards to the FOMC and how they kept the word patience and basically they remain dovish. Okay, citing international concerns such as France, Greece, etc., and the need to remain constant or to keep the rates on pause. Okay. The only wild card obviously is oil. Oil, given the fact that it dropped late towards the $50, $51 level, so that's probably the only wild card. To be honest with you, uh, think of it as a stimulus as well. So one could certainly think of it or consider it as a stimulus. It's certainly bullish for technology stocks. Maybe not bullish for the commodity related or the S&P 500. But we'll see exactly how that transpires. Given the fact that we've got a weaker dollar, that should technically help commodities move higher. Given the fact that copper and gold obviously have pushed higher. Okay, let's see where we are in terms of technicals. Now that we know the FOMC remains dovish, therefore that's conducive towards equities going higher. And now we also know why the S&P 500 obviously broke out. So given the fact that these individuals have access to the minutes before me or you, they certainly front run the markets, and you can see why the markets were so bullish given the fact that we had the uncertainty regarding Greece, yet the S&P 500 is still moving and shooting higher. Okay, so that explains that. Right, so the S&P 500 on a daily chart, you can see that we've consolidated above the last of the previous highs, which is bullish. Okay, there's nothing bearish about this chart at all. A 60-minute chart, again higher highs, higher lows, again consolidating above the previous high. Nothing really bearish about this chart at all. Okay, 10-minute chart, again we had this H&S formation. We negated the H&S formation because we obviously exceeded the right shoulder being more than 75%. As you can see here, we went as high as 2100, and this is interesting given the fact that we've got this downward sloping diagonal trend line. We broke above it, we retested it and bounced and moved higher. So again, with obviously the volume that came in towards the latter part of the day was more or less a buy the dip type volume. So everybody was bullish going into the close, given the fact that they were willing to buy the dip. So therefore, overall bullish. Okay, so nothing really here to be seen in terms of bearish price action. But again, if we do hold this pivot high up here, and this pivot high being 2101. Okay, and the market fails to go above that, then certainly you do have an argument for the downside. Downside support levels. Downside support levels will be 2090 and obviously 2086. They're the two levels that we're going to watch on the downside with regards to the S&P. Now let's corroborate that and verify that with the Russell 2000 with regards to the S&P. Daily chart, the Russell looks bullish, obviously bullish engulfing candle on a daily chart. Next level resistance is around the 89.90. Okay, 60-minute chart of this certainly seems bullish again, taking out this previous pivot high. The next one, like I said, is at 89, so nothing bearish there at all from regards to the Russell. 10-minute chart, bullish close, so nothing bearish there either. So overall bullish for the Russell, therefore that's bullish for the S&P 500 too. Okay. Let's have a look at the Dow now, the Dow Jones. The Dow Jones chart, again, we consolidated above the previous resistance high, so nothing really bearish there at all. The next level being the 80,100 level. 60-minute chart, again, nothing real bullish there at all with regards to the S&P, the Dow on the 60-minute chart. The 10-minute chart, let's just quickly have a look at that. Okay, again, one could argue, yes, you have a potential double top scenario here. Again, let's just take that with a pinch of salt, and given the fact that the FOMC is dovish, it's very hard for me to argue and put together some sort of bearish argument here, other than the fact that oil price is dropping. That isn't sufficient enough for me as of yet. If obviously we could potentially create a H&S, but again that's early days, it's hypothetically speaking. So again, for now we're obviously holding into this resistance, and we'll see how this pans out. The next variable that I tend to basically corroborate and cross verify basically is the Dow transportation stocks. So if I bring up the Dow transports, here we go. Okay, so Dow transports, one could argue, certainly are coming into resistance on the daily chart. 60-minute chart looks nothing near bullish, anything that would be conceived as bearish. 7-minute chart certainly bullish as well. We obviously finished at the highs, very, very bullish. So very hard for me to argue on the downside with regards to that. Okay. Again, now let's have a look at the Nasdaq now. Daily chart of Nasdaq bullish. Again, we're above the last previous high. 60-minute chart, obviously we've been bullish. We've been basically making higher highs and higher lows. Very hard for me to argue to the contrary. And the 10-minute chart, we finished at the highs as well. So again, nothing there at all. Now, the only obstacles that we have are, number one, the semiconductors are into resistance. Okay, and the biotechs also, obviously after failing the H&S, which really has been negated now, then again we are back into that double top resistance. So the question is, were the FOMC minutes enough to propel the markets to new highs, given the fact that we had the dovish stance? So that's basically what it all comes down to, whether or not it's sufficient enough to basically Adil bringing you a conclusion that this is going to be propelled higher or not. So again, that's your choice that you need to make with regards to which way the market's going to go. My personal opinion is that we are going to go higher. Okay, that's my personal opinion. That's what I expect the markets to do, and that's basically my interpretation. So given the fact that the FOMC minutes were dovish, and that's what I'm expecting. Okay, so again, obviously do your own work, do your own research, do your own analysis always. I mean, this is just my understanding, my take, and my perspective on the markets at this very moment in time. It's very hard for me to argue anything to the contrary. Okay, especially when you have a QE from the ECB, you've got QE from basically dovish interest rates on hold, and dovish minutes and commentary out the Fed, and also we've got the BOE now talking down the currency, and also discussing the concept of a potential rate cut, and with regards to the inflation data being weak. So, and also given the fact the employment level is very strong. So very interesting, very interesting times. Okay, so this is basically where we are at present, given the fact that we've got the Greece situation obviously resolved more or less, on the verge, unless there's any strange alternative news flow or Germans reject, etc., because the Greeks have put forward a motion, and obviously it's based on the European Union to obviously authorize that and pass that in terms of voting for it. Obviously if that's not voted in, then that may well cause a problem. So we'll see. I mean, Greece certainly is a wild card, but having said that, the markets have totally ignored it thus far, and obviously the FOMC minutes confirm the fact that the markets were ignoring it with some conviction, obviously, given the fact that they already knew that the FOMC minutes were going to be dovish. Okay, and that's why they were buying the S&P 500. Now, one could argue, you buy the rumor, sell the fact. Yes, open to that understanding, given the fact that one individual stated that the S&P 500 failed to make a new high, even with FOMC minutes. Yes, I respect that argument as well, so I'm not going to argue against it. That's certainly one argument, but for now, I'm going to stay innocent until proven guilty, and at present it's not guilty. Okay, that's one of the technical lessons that I was taught: innocent until proven guilty. So for now, it's not guilty. Okay, if it becomes guilty and the market starts to break down and goes below on the S&P 500 around at 2090 level, and we start to break down, and the market starts showing weakness, there's some certainty with regards to Russia, Ukraine, Greece, etc., etc., then yes, the situation is totally different. But when we have a chart of the US dollar, which I'll just bring up for you, the US dollar on the verge of breaking down, which obviously will generally help stocks move potentially higher. Okay, and that's obviously a different story altogether. Okay, so that's something that we're going to take into consideration. And all eyes on oil. It's very important that oil makes a potential base. That's going to be very important for regards to the actual markets moving and propelling higher. At the moment, we were on the verge of breaking through. We've pushed back down, obviously, now to that $50 level. So potentially just consolidating within this I don't know, you can call it a contracting wedge, etc. pattern, and we'll see exactly which way this breaks out. But given the fact that the Fed is obviously dovish, and the interest rates are going to remain lower for longer, then that should obviously be conducive for equities, and obviously commodities, given the fact that the dollar is going lower. So these are all factors that we're going to take into consideration. So my bias, like I said, at this very moment in time, certainly remains high, and expecting potential new highs with regards to especially the US markets, given the dovish minutes. And again, like I said, innocent until proven guilty. If the markets start to sell off tomorrow due to X, Y, Z variable, could be a variable that's already known, such as Greece, or it could be a variable that we don't know at all. That could cause a sell-off, and that could cause a rapid bias change. I'll be happy to adjust and trade accordingly. Okay, folks. So risk on, risk off.